A credit union does exactly what its name implies. It grants credit to members of a union or a specific group of people. For example, people who work for the same company can pool their money in a credit union. They're more likely to get a loan from their credit union because they're borrowing from people they know. This circle of people, this union, is called a common bond. The key here is that these borrowers are also more likely to repay the loan because they are borrowing from people they know and interact with. This common bond also allows low-income people who might not qualify for a loan to get a loan from their credit union. Serving the poor is an essential part of a credit union's mission. It's one of the main reasons a credit union's profits aren't taxed. Another reason credit unions aren't taxed is because any profits they make are supposed to benefit the same members that contributed the profits. But some credit unions have abandoned their mission. They make profits not to serve their members, but to grow and compete just like a bank. In reality, they're no longer credit unions. They're fakes. Here's why. Remember the circle? When a credit union breaks out of that circle by opening membership to the general public, it's no longer a real credit union. It's just a mutually owned bank with incentives to keep profits in order to make even more loans to unrelated individuals for even more profits that fuel growth and higher salaries instead of lower loan rates for members. It may look like a credit union and talk like a credit union, but it's a fake credit union, retaining millions in profits from its members, but not paying taxes. With no common bond, members of a fake credit union are no more likely to qualify for a loan than at a bank. And that means low-income people are less likely to get loans from a fake credit union. In fact, fake credit unions aren't interested in serving the poor at all. Fewer than 6% of the branches they build with their retained profits are in low-income communities. Mutual banks, just like any cooperatively owned business, pay income taxes on their retained profits. But the fake credit unions get to compete like a mutual bank and retain millions in profits without paying taxes. They're having their cake and eating it too. Credit unions and banks play important roles in our economy. Historically, they've worked together well. There is no tension between banks and real credit unions. The conflict is between tax-paying banks and a growing number of fake credit unions operating like banks without paying taxes. This hurts the real credit unions and the community banks, not to mention the schools, police and fire departments, and every public service that relies on taxes for support. But how do you know if your credit union's a fake credit union? Most people would never knowingly support a fake credit union if they knew it would hurt their local school or erode funding for first responders. It all goes back to the circle, the common bond. If you joined a credit union based on where you worked, went to school, or if you lived in a small, tight-knit community, you probably joined a real credit union. However, fake credit unions rarely mention membership requirements or make them so broad anyone can join. Fake credit unions advertise to the general public, just like banks, knowing they will let anyone join. Americans should be able to bank wherever they want. The decision, your decision, should be based on price, service, and convenience. You shouldn't have to worry that your decision might hurt your local schools or take funding from your police, fire, or other public services. It's why two leading tax policy think tanks, Tax Foundation and National Taxpayers Union, have called on Congress to address the abuses of a tax exemption that was intended to help real credit unions serve the working poor.